Okay, good morning, everyone, and welcome to our Tuesday market outlook session. Today, I will be walking you through how we are viewing the current markets. And as a whole, equities have been quite strong, but we have noticed some interesting price action yesterday in equities, and I would like to highlight some of the key levels to be made aware of. So quite a bit to go through today, and before we get started, just a quick disclaimer. The types of securities forms and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by OptionsPlay or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, we'll be starting off with the major indices. As usual, we'll be highlighting some key levels, going over some technicals to get a better idea of market direction. We do see some short-term headwinds to the equity rally as we approach the year end. It was announced yesterday that Powell is back for a second term as Fed chair, a more hawkish option compared to Brainard, who was the other top candidate. We also have a resurgence of COVID infections in Europe, and with more countries starting to move into or considering some forms of partial lockdowns, this will definitely have some impact on global demand. We also, while we maintain our bullish view on equities to the year end, it's always good to know where the key levels are, should there be any pullback. So from there, we'll be moving on to fixed income and commodities. A lot of volatility in the last few weeks or so in bonds and yields, especially after yesterday's Fed chair announcements. We'll be taking a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the market. And we will end today's section by looking at some subsectors and some bullish and bearish market observations. My name is Prakash Vijayanath. I am an analyst here at OptionsPlay, and I'm really excited to share with you today our thoughts and analysis on the current market. So before we take a look here at the S&P 500, let's consider what factors are dictating price action right now. On the plus side, we have a very strong earnings season, and we can expect strong seasonality up until the year end. But on the downside, we have a resurgence in COVID cases in Europe, which is worrying as there will likely be some forms of partial lockdowns. We also have inflation, which equities seem to be navigating through quite well so far. But yesterday's Fed chair announcement is what really moved markets. And we saw a big move in yields, which we will get to in a few minutes, but also in equities, as you can see yesterday. But at the end of the day, markets have priced in at least 2 rate hikes for 2022. And despite Powell being more on the hawkish side, we know what to expect. He's not really an unknown variable. And I actually view that as a positive in the longer term, because what markets hate the most is uncertainty. So if we take a look here at SPY, we can see here there was a strong break above 453, and price in more recent days struggled to move past this 470 level. Early yesterday in trading, it didn't move higher, but it did reject that later in the day. And if you look at the price action as a whole, it is on the overbought side. We are seeing a slowdown in momentum, and I do think a pullback is warranted. And we want to look at some key levels here for this pullback. I would probably highlight that 463, 462 level around there. And if it breaks below that, definitely the 453, which I think will be a strong level of support, because overall outlook here remains positive here for equities. So I don't expect a very big pullback here, should there be a pullback after yesterday's announcement. Moving on to the NASDAQ 100. The NASDAQ 100 is a bit more exposed to the technology sector, and the technology sector is more vulnerable to rate hikes. So we have seen a bigger decline here yesterday in the NASDAQ 100 relative to the S&P 500. But again, at the end of the day, markets are priced in Jerome Powell, and I do think this is more of a knee-jerk reaction than anything else. When it comes to the major indices, in my opinion, the big unknown variable is COVID in Europe, and that could impede on the current rally that we are seeing. So we may still see a rally here for equities, but it may be more choppy just with the additional headwinds that we're facing right now. And taking a look at the NASDAQ 100, very similar in terms of price action to the S&P 500. Should there be a pullback, a further pullback, I do think the 390 level would be the initial target for the pullback. It lines up nicely with its 21-day exponential moving average. But should there be a further pullback, should that level break, I would probably look at that 382 level here or so. Probably look for some bullish price action before that move higher here. So moving on to growth versus value. So we really saw here in the last few days that growth almost broke out again relative to value. It did pull back quite significantly yesterday. And obviously, this is a ratio chart and not a price chart. But if we take a look at the weekly chart, we can see that last time it was near this level, value did start to outperform growth. And we're starting to see that here again. So this isn't really by any indication a bearish indicator, but it does tell us that maybe the growth names are a little bit more overbought relative to the value names and are pulling back. But you have to remember that the major indices are heavily weighted to this tech sector and growth names. And it does tell me that, again, you may see a bit more choppy price action should the rally continue here for the major indices. So if we take a look at small caps, very concerning. We obviously saw this big breakout finally for small caps above 233. Price did kind of top at around just below 245 or so, just 245 or so there. And we saw this big decline here. Now, if you asked me this last week, this pullback would have been welcome, considering how overbought price was just a few weeks ago. But what we would have liked to see some bullish price action at around the 233 level. And yesterday, there was some clues to that, right? There was that initial move higher in the beginning of the day. And then small caps by the end of the day just reversed lower, broke below the 233 level with strong bearish momentum. And that for me is quite concerning because it is now back into this longer term, almost year-long range-bound zone that it was struggling to break above, for a year or so. And you really want to see a break above 233 for small caps to continue their rally and really be part of the broader rally that's being experienced by the major indices here. If we take a look at bonds, so bonds, a lot of volatility, a lot of choppiness as well, but we are back at 146 at the end of the day. We did see this strong move to 151, very strong rejection all the way to around 146 or so. And since then, price does look like it's going to open below that 146 minus support level the last time I checked. And our view in general when it comes to bonds is quite bearish. I do think that there's more downside here for bonds when you take a look at the fundamentals, and especially now with growing yields. So I would probably look at potential targets here for bonds will be at around 141 or so. But I do expect a bit more choppiness here for bonds in general. So moving on to yields, very strong over the last couple of days or so. We did see that strong bounce from 145 all the way to 165. Since then, yields did pull back to its 55-day exponential moving average and bounced higher yesterday and is continuing that today. So it broke above 165 and it is now looking like yields are going to reach 170 basis points or so. Should that break to the upside, short-term targets there straight away would be around 178, 79 basis points. And when it comes to yields, obviously, a bit of a headwind for most equities, but for financial stocks, they are a bit of a tailwind here. So I'd look for strength in, as yields continue to rise, I'd look for strength in the big banking names. Next, we have gold. So gold has been a very tricky one. We saw this break above 171, which I admit that I thought that it was a major resistance level. But what we can see here is a bit of a false breakout and immediately strong reaction to yesterday's spec decision. You can see here prices approaching that 167 minus support level. And I do think there's more downside here in gold, especially with the dollar being as strong as it is. I'd probably be looking here, should this level break and should gold continue further, decline further, I should say, I'd probably be looking at around 164 to 161 as possible short-term targets here for gold, but only really if it breaks below that 167 level. Moving on to copper. So copper, we highlighted this a few weeks back, but I wanted to revisit copper because we did see a very strong bounce by around 4.18 or so, and price is back at that 443. I would call that a minor resistance level, and you really want to see price break above this level, considering the fact that copper fundamentals, long-term fundamentals anyway, are quite strong. It's a key component to a lot of electrical devices that are in high demand right now. And I do think this level could be broken to the upside in the next few days. From there, I would probably look for a rally here in copper, maybe all the way to 462, possibly even higher to these highs here at around 481 or so. Looking at crude. Crude, we saw this very strong rally. It was very overbought all the way to 84, and then price has since pulled back. It broke below that 78 level and is now finding support at that 75, 60 level or so. Now, I'm not really convinced that this is a strong support level. We did see a bounce here a couple of weeks ago and a bounce on Friday. But again, price action, it's not showing me enough momentum for me to convince that this is a strong support level, even though it was a previous swing high, and it does look like it looks like the obvious support level. So again, crude kind of, I wouldn't say it's directionless, but a little bit more unknown when you think of this price action. You want, for confirmation lower, you'd really want to see that break below this support level that is currently trading at. When it comes to the fundamentals, though, here in oil, things are a little bit more complicated. So it's difficult to really gauge where oil should be. But OPEC is basically threatening to cut supply as some countries, including the US, are looking to tap into their emergency reserves to increase supply. So fundamentals here are a little bit unclear for oil. And to be honest, it really is right now, it's fundamentally driven. But from a technical perspective, keep an eye on that 70. And if we take a look at the sector rotation, we now have 6 sectors in the improving and leading category and 5 sectors in the lagging and weakening categories. So I did see some questions last week as to what this, what this diagram is, what this graph is. And basically what this graph tells us is the performance of each sector relative to the benchmark. And the benchmark in this case is the S&P 500. So we can see here, this is called relative strength ratio. And basically what it tells us is that if you see a sector moving to the right or to the left, if it goes to the right, it means that it's the sector is performing very well against the S&P 500. And it's providing some sort of leadership. If it's moving to the left, it's underperforming the S&P 500. The relative strength momentum, that's basically the first derivative of the relative strength ratio. That basically measures the rate of change of relative strength. And so that's why if you see sectors that are moving up, it means that in the last few days that the relative strength has really has improved at a very fast rate. So that's why you'll see some sectors moving up, but not providing leadership yet, because there is a lagging component to this diagram, and it needs to essentially outperform the S&P 500 for a number of days for it to start moving to the right. So I hope that gives a better indication of what this graph tells us. And what we can see here in the leading category, communications and materials, both providing leadership for the last week, or maybe even more for technology, both losing a lot of momentum. Still in the leading category, but if this continues, we may see them move to the weakening category. But if we take a look here in the lagging category and even the improving category, we see financials, utilities, staples, and even healthcare and real estate now, all showing signs of growing momentum. We still have a long way to go before improving and leading categories, but financials is the one you really want to take a look at if you are interested in a rising yield environment here. On the downside, we have communications. It did show strong momentum over the last week and a half or so, but momentum has since reversed completely lower. And again, we'll get into communications in the next couple of slides or so, but it does look like communications may rotate back into the lagging category. So technology, let's take a look at where it's currently at. A big rejection of this 172 level. yesterday. Price did break above that initially and reverse lower. We can see it is overbought. It's fairly far away from its 21-day and 55-day exponential moving averages. And if you want to take a look at some key levels for pullback, I would take a look at the 164 previous mini swing low. Should it break below that, definitely the 159 area would be another potential area. But overall, technology, it's tough to gauge where it's at, because while fundamentals in semiconductors, which are a big part of the sector, while those fundamentals are actually improving, we are seeing that the fact that rising yields is really affecting the higher growth, higher beta names here. So I want to keep an eye on, definitely prime for pullback here, and possibly to 164 or 159. Those will be the key areas that I would be looking at should price pull back further. Next, we have communications. Very concerning here, because you see this decline from 86 all the way to 78, where it found support. It was forming somewhat of a base here between 78 and 82. Multiple rejections of 82, and last week price was flirting with that level when we had a look at technology and when the sector, when the trends turned bullish, but it didn't break above that 82 level, which was why I was still concerned about communications, I should say. And we can see here, since then, strong bearish move all the way to that 78, 79 support level, and it's breaking below that with strong bearish momentum. This does open the door for a move back to maybe 77, 76 or so for communications. And we actually did have a closing daily play trade for Charter Communications, which is part of the communication sector. I do see further weakness here for communication stocks as a whole. Materials. So materials, another sector that was in the leading category, or that is still in the leading category. We saw this very strong bounce from 79 all the way to 90, and price since then started pulling back. It broke below its previous high at 88.60, and over the last 2 days, it's tried to retest that, and it's failed on 2 occasions. The retest has failed. From a technical analysis point of view, it does look prime for a pullback. Price is pretty overbought, weakening momentum, and a failure to really break above and maintain above that 88.60 level. That does tell me that it's a little bit more downside here for materials, maybe back to around 86, which could act as a minor support level. But again, it does pull back nicely to its 21-day or even 55-day exponential moving averages. If you want to look at bullish price action, you want to see bullish price action at these levels before looking for a further rally higher here for materials. Looking at a few subsectors here of interest that I have, the global lithium and battery technology ETF, strong break above 87.30 here for LIT, and then it did run into some resistance here just below 97.50. Price does look set to open a little bit lower this morning, last time I checked, but overall the fundamentals for the subsector are decent, and I do think that we can, if price can maintain above 92.50, that we may see a bit more consolidation in this area before a breakout higher here. But also, it does look like it's pulling back slightly, and it did pull back a few days ago, and it found support at 92.50. So I do think that is a key level to look for should there be a further pullback from where it's currently at. However, if that level should break, really you want to be looking at the 87.30 level. So next we have TAN, the solar ETF. We currently have a daily play position here on this. Solar overall fundamentals look good. There's a lot of hype after COP26, and the reason we had this as a daily play trade was because it provided a good broad-based exposure on solar companies in general. And we saw here from a technical perspective, price did break above the 93 level with strong momentum, and it's since come back to retest and has remained above the 93 level. So that's very encouraging for a move higher, but right now it is still consolidating between 102 and 93 or so. And it did look like yesterday that price was maybe breaking above 101, 100, maybe approaching 102 and even higher. But since then, price did reverse a lot lower here yesterday. So our thesis remains intact, and it is a debit spread, which only expires on the 21st of January. So it is a bit more of a longer term play here for this ETF. And I think as long as this 93 level can hold over the next few weeks, we will still be in this trade and potentially looking for a move back to, I'd say, 110 or so. Next, we have Freeport McMoran. Again, I know I highlighted this a couple of weeks ago, but I want to highlight it again because it is back in play, right? It was supposed to be our daily play on Friday 2 weeks ago, but we did decide to cancel that daily play. That's because price gapped up significantly at the open near an area of minor resistance, and that would have invalidated our entry price and our thesis as well. But since then, price has pulled back all the way to that 37 level and has found support there once again. So I do think FCX definitely back in play. High exposure to copper prices. So I think if you can see a breakout in the copper prices, I think Freeport is definitely an excellent way to gain exposure to that. The first step would be to break above the 39 level. And from there, I would probably look for a further rally on to 42 or even higher back to all-time highs at around 45 or so. Next, we have JP Morgan. JP Morgan bank rising yields. You have something that you have to consider here as potential bullish candidates. We saw here yesterday, on Friday, that price found support at 160 once again. It bounced higher on Monday with strong momentum all the way above 163, and it maintained to stay above that support level here. So I do think that's constructive for a move higher, especially with the fundamentals being as they are, as positive as they are for banks right now. And I think that we may see a potential move higher here for JP Morgan all the way back to 172, which was its previous swing high a few weeks ago. And we have FedEx. So FedEx, I'm a bit more contrarian on this. I know it's been on a long-term bearish trend here, and it did find support at around 220 or so. Rallied all the way to 254, struggling to really break above that, pull back, and yesterday it did bounce higher with strong momentum. And I think overall its momentum has a positive, and from the fundamental side, it still has some strong tailwinds from the pandemic. So, I think that this is a great opportunity to enter a long position, if anything. But for those that are more conservative, definitely a break above 254 would really confirm that. Maybe a break, a retest, and a continuation higher. In terms of targets, you really want to be looking at around just above 270, between 270 and 280 or so as potential targets here, should there be a break above 254. But just to let everyone know, earnings will be announced in the next couple of weeks or so for FedEx. Next, we have BMY. So we saw here this long upward trend. Price did somewhat squeeze a little bit at the very top, and it broke down to the downside here below that 66.70 support level. Very strong bearish move, broke below $60, did find support at around 57, came back to retest at $60 level, failed on multiple occasions, and it just looks like it looks very weak at the moment at current levels. And if you take a look at the weekly chart, I think it provides a better insight as to the technical, as to what I'm seeing here. You can see here that there's a strong bearish move, a bit of a pullback to around 59.60, failed retest, and it really does look like that continuation down is set to happen up until 54 or so. Next, we have Snap. So Snap, very bearish. You see the strong bearish move here from 76 all the way to around 52. Price did stall at this area for a while, and then it's looking like it's breaking down lower. That being said, it is at an area of support. It's an area of strong support, but Ultimately, Snap is an unprofitable tech company. It's not going to do well in this current environment of rising rates, rising yields. And you really want to see that break below that 49.50 level. And that would really open the door for a move lower all the way to 39 or so. Next, we have IP International Paper. So yeah, we see the strong bullish move all the way to 62, then a bit of a decline, broke below 50, came back to retest it. It failed and it moved lower once again. Now, I will say that yesterday's price action would tell me maybe there's another retest on the cards here for IP back at 50. And I think if we see some bearish price action here, that really does provide some confirmation of a move lower here all the way back down to 45, which is a fairly strong support level based on the weekly chart, as you can see here. So definitely, it looks like more downside here for International Paper. It's part of the materials sector, which is seeing a slowdown in momentum and looks like it's rotating out of that leading category for now. And its fundamentals are somewhat neutral at the moment. So I do expect a further decline to 45 here, but maybe a short-term rally to around 50 before it declines further.
Hey there. Thank you so much for watching. I really hope that you enjoyed today's session. If you want to watch the full recording and all of the market mover symbols that I covered today, register for an account at OptionsPlay.com. You will access my daily trading signals to follow along and weekly options education sessions to improve your trading skills, and gain full access to our platform to analyze the risks, rewards, and probabilities for any trade. Regardless of where your ideas originated from, filter them out with OptionsPlay and start gaining confidence in your trades with our platform. And the best part is that you can start completely free with a 30-day trial. Click on the link in the description below to learn more. And as always, have a great trading day.